Good morning, everyone. Hopefully, your morning is getting off on the right foot. It is Wednesday, hump day, and stock market has opened, so we can take a look at that and see what stocks are doing. Looks like my Chevron stock is updating here. We'll give Google a second to figure itself out. So, we're on the second day of October. Yesterday was a down day. No big deal. No big deal. We had a nice rally in September, which hopefully ended the month with everybody making good gains on your stocks. And we'll see how October treats us. It's going to be interesting. I don't know what to expect in October, but I do know that I think the China trade has knocked on my door and I am answering. I'm really looking into Chinese stocks, and I've got a couple of things to share on the live stream around China. The energy markets have gotten really interesting because there's tension in the Middle East, and that tension is causing oil prices to really jump up. They were up, I'm going to say 3% in earlier trading, and it looks like Chevron's up about 1%. So oil stocks, I think we talked about them a month ago when oil prices were pretty low, and it was a pretty good time to look at oil companies, because this is what happens. Oil prices tend to, kind of meander down and then spike up. And we're seeing one of those spikes. Now we're in oil prices that are in the low 70s, which is good for an oil company. So that's the payoff to anybody who bought oil companies or has an oil stock in their portfolio, whether the oil company is an exploration company that extracts oil from wherever that oil is at, kind of like an Occidental, to a fully integrated company like a Chevron, Exxon. I think other stocks like Shell, the company out of the Netherlands that is a big oil company, came up not too long ago. So oil is working. Energy companies are working. The rest of the market, not so much. Let's take a peek to see what's going on. The Dow is down 0.32%. Nike's part of that Dow. Nike did not have a good earnings yesterday, and I think their stock's down quite a bit. S&P is down. NASDAQ's down a little bit. The Russell's down a lot, but I bet you that's going to get better. The Russell tends to kind of come out of the gate slow. And we're only a couple minutes into the trading day, so we'll give that a minute to kind of wake up. Now, Asia is going to give us a little bit of update. Looks like Japan ended their day down. China, the Shanghai exchange is closed until I think Tuesday of next week. They have holidays, but some Chinese stocks still get traded, like Alibaba is traded on the New York Stock Exchange. So investors can buy and sell Alibaba, as well as a number of Chinese stocks that are traded on the New York Stock Exchange. I think that's a benefit to those companies, so that they can get investors in Asia and get investors all over the world if you're trading on the New York Stock Exchange. So good for Alibaba. All right, so that's what's going on there. Before I dive into some threads I had this morning that I thought might be interesting, let me say good morning to everybody. How you doing, Shadow Guy? Trader Prad, very nice to see you. Sergio in Portugal, good afternoon, sir. Hope you're doing well. Bond yields are up today. Interesting. Well, when bond yields go up, I buy bonds just to play the contrarian point there, because and there's a viewer that was asking me questions on the Discord around bond yields. The best days are kind of behind us on bonds. 2 years ago, yields were really high. Interest rates were really high, and they've been kind of just gliding down. They're going to continue to glide down. So when you can, it'd be wise to lock in some yields, because 2 years from now, we may be sitting on super low interest rates going, man, bonds are not doing anything, uninvestable. And you might think to yourself, I should have bought some bonds back in 2024 and locked in, a 5 to 6, 7% rate of return, depending on risk level. That's the decision, right? So on days when bond yields rise, I'm picking up some bonds because we'll see where we end up. In 2020, I had no bonds. Bonds were uninvestable. 0% is not a good rate of return. But when the rates, went up just sky high, I really got into bonds. So I'm glad you're thinking bonds. It'll be good to pick up a couple more shares of that ETF I've been buying into long-term bonds. Yeah, Do Me Trash. Good to see you, man. Thanks for joining. I hope your investors are doing well. Investments are doing well this morning. Tomas, good morning. Hopefully you are having a nice day in Argentina, and good luck to you in your investments. So Trader Prad, thanks for tuning in. I hope you have some interesting trades today going on. And I look forward to seeing your stream tonight at 8 Eastern. Okay, so a couple of threads I wanted to follow this morning. First, I wanted to follow a thread of some news came out around Tesla announced, their unit sales for, I believe, the month of September. And I also did some homework on Li Auto. Li Auto's like their stock's just exploding. So I wanted to follow that thread. I thought it might be interesting to kind of take a look at both companies. So let me find the right screen. All right. So Tesla reported their deliveries, and the market didn't quite like what they saw. I think revenue is slowing down, and it's a double negative, which is they're not selling. The growth in unit sales is slowing down, and the sale price is coming down. Double negative. Because when the sale price is coming down, that's squeezing their profit. And it's also changing the overall story of Tesla, which is, hey, this is a high growth company. Well, you got to be high growth to be high growth. You got to grow revenue to be growth. And if you get to, they're not really growing anymore, then I think I'm not in the stock, but I think investors might think, whoa, I'm not in a growth stock. The reason that these guys are being really, they're having headwinds. In the last month, the stock is up 16%. This is a rock star stock. Some people own Tesla. They think they're going to figure out the world's biggest problems are going to be figured out by Tesla. And more power to them. They figured out the EV market. Good for them. And I get comments whenever I say anything about Tesla that are quite interesting. Like, oh, no, their storage batteries are going to come in for the rescue. And if you look at storage batteries, they make up like very little amount of revenue. So yeah, they can grow that quite dynamically, but it's not going to represent much on the income statement. So they're not growing very much. When we look at their growth of 1.37%, ouch. Investors have paid $800 billion for a company that's growing 1% in the automotive industry, which is not very profitable. And their cash flow is terrible. Their cash flow for $800 billion, cash flow is 1.7. If you put $800 billion in T-bills, which is federal, the government's going to pay you probably about $3.2 billion in cash flow. And that's for zero risk. Tesla is only going to pay you 1.7 rate of cash flow return. That's a terrible investment. So what's going on? Why is Tesla really troubled? Well, I happen to think it's because Chinese automakers are organic competitor that's come out of a market where they have an advantage of having a lower, cost of labor market. They are smart. They're educated. They're growing their middle class. They're doing a lot of things that organically that economy is beginning to take over some industries. If you look at like the PC industry, I would say that 80 to 90% of the components around PCs, devices, and so forth China. And it's very hard to leave that center of knowledge and ability to manufacture and logistics and all that good stuff. Of course, they make like all the consumable products that we buy, at Target or at Walmart and so forth. But China's beginning to make these really complex products, and they can. Let us not forget, China has a pretty advanced space program. They've got really smart scientists over there. They have strong universities. They've invested in infrastructure. They have power generation. They've got a lot of things. They got a lot of hydropower because they have water. They've dammed the water and are generating hydropower. So there's just a lot of things that are going on. And Li Auto represents one of the competitors that is doing quite well and really letting Tesla know, hey, we're here. FYI, we're here. And our stock is going up. Look at the market cap of this guy. 30 billion. Tesla, 800 billion. Wow. This seems like a pretty affordable way to get into the automotive industry for a company that's growing. Now, their growth on the trailing 12-month looks fantastic, but I took a close look and the growth is really slowing down. And I think collectively, the automotive market's getting more and more competitive. You have, of course, Li Auto, NIO, BYD, and you have the traditional legacy car manufacturers like BMW is awesome company, and they've come out with really good EVs. Mercedes come out with really good EVs. Volkswagen, I could go on and on. Every legacy car brand is coming out with EVs to be competitive. So that's the collective competition that's affecting all car companies. I think who's going to win at the end? It's going to be the company that creates the best product for the best value proposition, right? If Li Auto produces a car that's better, and especially better for every dollar spent, they're going to be successful. And I think they're going to do quite well. So that was interesting to see that Li Auto continues to flourish. And if we take a peek at Chinese stocks, let's see if we can update stock prices. So the China trade continues to go and go and go. Alibaba's up 2%. NetEase 7%. I got to analyze that company. That's on my list. That's like next or the second one I'm going to take a look at. I've created a video on JD. They're up 5%. Baidu up. Becky 9%. Lee 3%. Tencent up almost 9% today. This is awesome. Holy smokes. China has awakened. Look at these gains. And I'm jumping in. I tend to like when stocks kind of have a pullback and I buy. Like I've been buying into Amazon with that type of approach. But this train is leaving the station and it's not going to stop for a while. It feels like. So I'm buying. I'm buying into a ETF, and the ETF is symbol L 1 second, FLCH, and that's Franklin is the issuer of the ETF. I looked at a few of them, and I had started with others that were quite popular, but the expense ratio was higher on those, and I actually liked the mix of companies that this ETF has. I'm in it for $2,000, and I'm going to probably put another $1,000 down because it's just this train's left the station. I don't know if the train's going to stop for a while. And there's a lot of, fundamental big causal factors that are propelling this market. The Chinese government's very well funded. They have plenty of resources to make things happen for their economy. So they're supposed to grow up 5% in China, where in the US, we're going to be happy with about 2%. So the China trade is on, and it's on a Wednesday. Their market is closed, but as you can see, these stocks are moving, And it's because most of these stocks you're seeing listed here are traded on the New York Stock Exchange. So you can buy Alibaba stock. I can buy Alibaba stock. You can buy those ETFs. Those ETFs are obviously tradable and they own positions in these companies. So interesting that the market in China is doing well. One item that I want to get into is understanding stocks in India. And I'm in my career, I've worked with Indian companies and I've worked with a lot of intelligent professionals from India. And I could tell you that for the technology space, India has a lot, they do a lot for that industry. And you see Infosys is a technology company, Wipro is professional. These companies are professional services companies that are very entrenched into the technology space, and their market caps, they look pretty decent. So that's a space that I'm going to start to get more knowledgeable on because I do want, if anything, just to be knowledgeable on India and the stocks that India has, potentially diversifying. Because diversification is both, you diversify into multiple industries that you understand, industries that you believe in. So that way, when one industry is down, another one picks you up. Example today, oil is up, but some other industries are down. So that's why you want to diversify across different sectors and industries. And it should always be something you understand. Don't go into something because, well, everybody's into this industry. I have no idea what the industry is about, but I'm going to buy some shares. That's not my style, and I wouldn't recommend it to anybody. So, the other way to diversify, which is important, is to diversify in different regions of the world, because sometimes you have a region like China is growing faster, India is growing, I think, quickly. I haven't done that much homework. But like in Mexico, they're growing really well. That Mexican economy is doing well. And they just put a female president in control of the presidency in Mexico. I think she was sworn in yesterday. And that's pretty cool. That is pretty damn cool to see a female leader of Mexico. Congratulations to Mexico. Congratulations to that president. Very best regards on running that country. Mexico's economy is doing really well. They're doing really, really well. And I own one stock that has most of its operations in Mexico, and I own two bonds. One of them is with the oil company down in Mexico. I bought it at the right time 2 years ago, and that bond has performed like a stock. It's been really, really nice. I don't know that you can get that rate of return now because, again, that was 2 years ago. But just diversifying to other parts of the world is a good idea. Most of my portfolio is still in my home country because I have the best knowledge, awareness, and ability to keep track of those stocks best in my home country. So I strategically buy into other countries, into investments that I could still understand and track. So it's not like, hey, I'm just going to put all my eggs in a foreign market. I don't know if that's a good idea for me. I'd rather make sure that I understand the companies I own for the most part. But I am interested in getting to know Indian stocks. I'll do some homework. Hopefully, I can bring some of that knowledge to the live stream as well as videos. All right, so we've gotten to India. We've gotten to Tesla. Tesla's having a little bit of a tough day, down almost 5%. Hopefully, Trader Prad's making a boatload of money on shorting Tesla. Hopefully, Trader Prad's going to be flush with cash later today. We'll see. I'll find out later. All right, so let's take a look at these sectors. Who's winning, who's losing, which industries are making it happen. Energy's on top. Oil prices and financials are holding their own. Materials. So materials, that's kind of like avoiding the radar kind of sector. But I have noticed that like TX has done well for the last 30 days. Copper, whoever mines or processes and produces copper, they're in a good place. You think about how we use copper, right? It's everywhere. Anything that conducts electricity has copper. And so that's in demand. and as well as other things, other materials like steel and nickel, all kinds of different types of materials. Industrials are losing a little bit. Worst performing, consumer discretionary. Nike is probably having a bad day. I'll take a look at that. I got to take my medicine. I'm a Nike stockholder, so I got to take the medicine and look at the stock, and see what's going on with Nike. I'm probably going to buy Nike shares because I believe in the company's overall story, and I think the company's going to be worth more than double its value in 5 years. So I'll take a look at Nike in a bit. Real estate's down. Consumer staples are down. That's a sign that people believe, oh, the economy is going to be okay. I don't need to have these consumer staples, nor do I need to have healthcare stocks. And man, the healthcare payers, insurance companies like Humana, they've been getting kicked in the face. Healthcare stocks are really down, which to me is an opportunity. I like healthcare stocks. Utilities are down. Technology is down a little bit, but technology is freaking a powerhouse. So I am not going to worry about technology stocks. All right, so let me take my medicine and take a look at, I'm going to keep the China trade there for a little while. Let's take a look at Nike. So I am a Nike stockholder. I believe in the story. Now, the fundamentals are going to need to catch up with the story. And today, the stock is discounted even further. But what I'm going to do with the stock is I'm probably going to buy $1,000 in Nike today. Again, I believe in the story. They didn't get to the number one dominant position by doing things poorly or not having the best ideas. And I think they're going to have a CEO that's going to bring them back to the basics around, hey, we're Nike. This is what made us successful, and this is what we need to begin to do again. So I'm going to be buying shares of Nike. I like to execute my trades after 1 hour of trading has happened. The market tends to tell me the direction it's going in. And I hate, sometimes the market has head fakes where at the beginning it's up and then it drops, or it's really low and then it comes back up. So let it kind of process a little bit, and then I'll buy some shares of Nike. But I think the stock is still, I updated my analysis yesterday. It's still discounted by 21%. I think the fair price is higher than its current stock price. And I'm willing to bet that the company is going to start growing. And when it does, investors will really recognize it and the stock will begin to perform. So we'll see where Nike ends up. All right, we talked about Li Auto, really exciting. Oh, look at that. The stock is beginning to fade a little bit. I think all the competition. One thing I wanted to mention about Li is Li Auto is predominantly in China. As I researched the company, I thought they were in other countries already, but they're not. They're now getting into Kazakhstan and they're going into Asian markets, but they haven't really gone into other countries just yet. So that was kind of interesting. I think that BYD is the one that's going after foreign markets outside of China. So that's interesting. All right. So we got through kind of like a couple of threads I wanted to cover. Now let me take a peek at comments, see what's going on with everybody. So Shadow Guy, Pemex is state-owned. So Mexico nationalized oil companies, and yes, Pemex is state-owned, and they issue out debt. That's how you or I could invest in Pemex. Now, what's interesting is that Mexico exports a lot of their oil, which is good. Then they create cash flow for themselves, and they consume a lot of it as well. But they have enough oil to supply the country, and they have excess, so they can export it, which is very good. So buying into Pemex, I believe, is a reasonable risk. It's not as risk-free or low. It's not the same risk quality as, let's say, if I bought Apple, because Apple's here in the US, a lot of good things about Apple. But I think it's a reasonable risk. And the rate of return on Pemex for me is 11, 12%. So I'm good with that. And it gives me that international diversification that I talked about a little bit ago. So, yep, that's who Pemex is. All right, so we talked, and I see Sergio's there. Good to see you. Tomas, good to see you. And it's great to see some young investors. And I'm going to have a comment there after I catch up. Android PC gameplay. How you doing, sir? Yeah, Humana, man. Um, I think if you get to know Humana, there may be a really good opportunity because it seems like for the revenue level they have and the type of business they are, it does seem like a pretty cheap stock. I have Elevance. I'm happy with Elevance. I'm good with Elevance. I'm not going to sell my Elevance. Got about $60,000 of Elevance, and I'm good. So I don't want another healthcare payer, but I could see your point there. Shadow guy. So Sergio, that's something I wonder myself. Yep. Yep. Yeah. So that's the advantage of stocks that trade on the New York Stock Exchange that are, basically foreign companies. And at the end of the day, a lot of these companies, they're international companies, right? Like Apple's selling iPhones all over the world. And they actually have legal entities in Ireland where they recognize most of their profits and then they pay a lower tax rate. So Apple was founded in the United States. Okay, it's recognized as a U.S. company, but it's operating around the world. So it makes sense that these Chinese stocks are traded in the New York Stock Exchange. We buy so much stuff from China already. They're part of our economy. There's no ifs and buts about it. We buy so much stuff from those guys. They're part of our economy. So they're part of our stock market. That's great. So they can trade on days when the New York Stock Exchange is open. I'm good with that. Okay, so Mike is, yeah, man. Humana's, kind of leaves me shaking my head, kind of like Intel a little bit, but different. I think Intel self-induced problems. I think Humana, it seems like they're being dealt some bad luck to some extent. So we'll see how that plays out. Really interesting stock. So, all right, so we got through that. Mike, Elevance is down to almost bought back in since I sold. I bought some Elevance shares either yesterday or the day before, and it looks like I might be buying more shares. Elevance is solid, and nobody's going to give up their health insurance in the United States. And employment data is good. Everybody has a job. There was an employment report today from ADP that showed that there's plenty of jobs out there. So if there's plenty of jobs out there and people are being insured, Elevance and United Healthcare and Humana and all these, insurance payers, they're going to be all right. They're going to be all right. And then we got a comment that there's an opinion that there's a bad CEO behind the helm of Humana. Well, based on the stock's performance, I don't know how much longer he's going to have his job. Yeah. So, yeah, I'm with you on bargains. I would just say that, one thing that I recognize is quality companies. I really appreciate. And I think Charlie Munger, Warren Buffett would kind of talk about this, that, a long time ago, like Warren Buffett, the books he read when he was a young investor was Benjamin Graham. And he had an approach where I think it was called the cigar butt investing approach, which is, hey, these companies don't have a super bright future in the long term, but they're so discounted, I'm going to buy them and then see an appreciation temporarily and then sell them. Right. Okay. Well, that's one way to do it. But I'd prefer to buy exceptional companies and I want to hold them for a long time and make a lot of money on those exceptional companies. I think China has exceptional companies. I think China is knocking on the door and I'm answering and seeing which stocks I want to own. But the door knocker 2 years ago was when tech was sold off and Meta came knocking on my door. Hey, I'm priced at $85 a share. I'll buy. I dollar cost average, but I bought Meta then. I bought Google. I bought Amazon. In 2022, I bought. I pulled equity. I should say I took some equity from real estate, put it in the stock market because I have a lot of equity in real estate. So I pulled some of that equity, put it into real estate. Good move. That move was a big impact on the performance of 2023, 2024. And what's knocking on the door today is China. I was, and you guys watch my streams and you watch my videos. And a month ago, 2 months ago, I'm like, man, it's getting harder and harder to find good, investments in the US stock market because they've done so darn well. They're just priced really high. When you value them, you're like, hey, great company, but geez, man, it's priced to perfection. But now it's like, oh, hey, let's take a look at India. Let's take a look at China. We talked about Mexico a little bit. Now, I'm not saying we dive in head first. No, just understand, US stocks is not the only play. There's fixed income bonds. There's crypto, and I'm doing some homework. I hope to provide a live stream or a podcast on crypto, and I'm going to create the live stream or the podcast from a stock investor's point of view. Why should a stock investor consider getting familiar with crypto? I'm not even going as far as investing. Okay. I'm not talking anybody into anything, but I would want you to get familiar with it, because when you get familiar with it, you understand that you can start making income through staking. You can get involved in the liquidity pools, which are really interesting, but you got to understand the pitfalls of crypto. Crypto has been an awesome performing store of value for me. My BTC, I think I could show it to you. So my crypto assets have done overall, I've doubled my money in crypto. So it's getting the job done. Bitcoin in the last year is doing really well. So the past is not a perfect indication of the future. But when you look at the 5-year on crypto, 650%. It's like, or I should say Bitcoin, not crypto. So Bitcoin is a really good store of value for me. I also own Ethereum, and I'm participating in liquidity pools, which are fascinating. Crypto kind of takes old legacy finance and puts it into new legacy digital market, definition. And I'm getting involved in that. So I wanted to, again, US stocks is not the only thing. It should be an important thing, but it's good to get educated outside that space. Okay. So, all right. So one comment I wanted to make. So I was going back and forth with a community member, and I was impressed and happy to hear he's 21 years old. He's been saving since he graduated high school for 3 years, and he's investing. And that's awesome. Everybody that's on this live stream, awesome. I'm glad that you're investing in becoming a better, or spending time, quality time, improving your skill set around investing. I can tell you for a fact that, I've opened up so many doors for my family, for my kids, for my wife, for myself, by being able to invest well, making money, giving myself financial freedom, security, having fun with that capital. And it's really empowering to know that, hey, you know what? I'm good. If you give me a computer and access to my brokerage account, I'm good. And I'll be good. Hopefully, if I'm blessed like Charlie Munger and Warren Buffett's still investing, and he's like 94. That's awesome. I can do this till I'm 99 like Charlie Munger. That dude was bringing it. He still had ideas into the very end of his life. What an awesome life. So everybody should feel great about putting time, energy into becoming a better investor, especially if you're like 21, 25, 30. Take this to the bank. People told me this when I was 20, when I was 25, is they told me things like, save 10% of your money that you earn, invest it, and you'll always have more money than you'll ever need. That was absolutely true. And I'm here to tell you is, If you learn something new every month, you will have more money than you can imagine that you could be worth. Um, if I go back 30 years and go, okay, this is how much I would feel if I got to that level. I'll feel like, man, everything kind of broke my way. I got there, got everything I wanted, and I sold myself way short. And now I look at the future and I'm like, I think goal setting is a good idea, but I goal set based on knowledge and ability. If I can keep getting better, I'm good. Because a numeric goal is, I'm not going to argue against it, but maybe I sell myself short again. Instead of saying, hey, I can make X, like I track my trailing 12 months performance, I track my year to date performance, I track my annual performance, I track my 3-month performance, and my 12-month performance is looking good. And I'm like, okay, how can I double that? And what's the knowledge and what's the vehicle to be able to make, instead of, that number, I make twice as much. So to me, that's constantly super interesting. And I think it's awesome that a 21-year-old is sitting there mixing it up with a 56-year-old and asking good questions. Awesome. Awesome. Just energize me. All right. So, Mike, you hodl BTC. Well done. And I think, again, crypto is like not a big part of my portfolio. When I look at crypto, I don't know if I have it on this sheet. I don't think I have it on this sheet, but crypto's like 4% of my stock, bond, and crypto portfolio. If you put in my real estate, it's like 1-2%. So it's a very small portion of my portfolio, but it's really interesting because the return's been great. And if I could put more capital in there in a very intelligent way, it's just going to keep performing. And for all I know, I wake up 5 years from now and have 10% of my liquid assets into crypto, and it's performing like it's performing today. That'd be really exciting. So that's, again, when I challenge myself, how could I double my performance? It's already really good for the trailing 12 months, but how could I double it? Well, maybe crypto's that avenue. All right, Brad. Oh, you're able to make the morning session. It's really cool. We had an awesome afternoon session, evening session. I'm going to have it again tonight at 5:30 Eastern. I'm going to have that session Tuesdays, Wednesdays, Thursdays. I know, Brad, that was something you wanted to see, so we got that done. Google down today. So what's going on with Google, man? I love Google. I can't stop talking about Google. I can't stop using Google. It's down 1%. Now the market's down a little bit. So Google is down well below the market. I'll probably add some shares if it's down 1%. I think I talked about Google quite a bit yesterday and Monday, but I won't go there again. I'll spare you guys on that one. But I think that's a good idea. I think that's what I'm going to do. I think I'm going to buy some Google. All right, good stuff. All right, so we're cranking along. A couple other things I wanted to bring up. NVIDIA. I want to talk about NVIDIA, and I want to talk about Tencent, and I'll talk about other things that you guys want to talk about. I think we talked about Humana. And all right, cool. I think I'm up to date. Omar, you want to talk about Oxy? Let's talk about Oxy. Not a bad time to look at Oxy. Let me handle NVIDIA, Tencent, and then we'll touch on Oxy. Okay, so NVIDIA, what's that stock doing today? It was down yesterday. It's up today. It's up 0.92%. What's been interesting about NVIDIA is that it is kind of caught in this trading range. If you look at the trading range where it's at, it hit its all-time high on June 18th. And then it came down, right? About 13%. And then it rallied back up. But the next rally did not get to that previous high. Interesting. So then we got from that high, it sold off. It sold off 26%. Ooh, getting a little spooky. And then it rallied back up. But that rally did not get as high as the previous rally. So where I'm alluding to is the highs are consistently lower. So if you were to draw a line, you would draw a line that has a declining pitch, a downward slope. And what it's also telling me is investors are really nervous when it goes above 120. Nervous time. Oh man, what's going to happen? Is this thing's priced to perfection? Is the AI hype too big? Is AI going to replace everything overnight? Well, let me point something out. We have a labor strike at the ports. The principal issue that the labor unions have is automation. They do not want to see ports automated. In Los Angeles, we have two major ports. And there's one area of one of the ports fully automated. Robots doing everything. And it's been like that for like 5 years. I have a brother-in-law that works for the Port Authority, and he tells me this stuff, and it just blows my mind. I'm like, why didn't I hear about this? Like, it's like, oh yeah, these are all robots doing everything, and it runs 24/7. It unloads the cargo from the ships, puts them on these like robotic moving things. That moves it to the right place, puts it in its place. They load them on trucks. Those trucks are driven by human beings, and then those human beings take it off and get it over to the rail yard or wherever it's going. So the unions for the ports, for the longshoremen are saying, you have to stop automating so fast. You're taking our jobs away. Back to AI. To think that AI is just going to have a clean path to automate a lot of occupations, I think is naive. It's unrealistic. I think there's going to be certain milestones where governments and people are going to push back and say, no, we don't want AI here, or we don't want it that fast, or we don't want AI to do this. We don't want AI to have our information. So that's an example of some of the headwinds that AI is going to face. So when you have headwinds on AI expansion, adoption, they're going to pump the brakes on buying more NVIDIA chips and GPUs. That's common sense. But common sense was not part of this stock's rise. If you look at the parabolic rise of NVIDIA, it's just crazy how fast the stock went up. I'm an NVIDIA fan. I used to be an NVIDIA stockholder. So now that we're seeing the stock go sideways, I think there's going to be a higher likelihood of the stock dropping. And we'll see. It's going to play out. It might take a year, might take 5 years. I may be wrong. We'll see. But if you look at the return for the last month, 9%, that's pretty good. It's pretty good. But if you look at from the high to where it is now, it's down 13%. Of course, I'm kind of cherry picking the top and the bottom. But I think the graph kind of tells you, okay, investors for the past 3 months have not been willing to take this stock higher. The other thing I'll point out is I'm accumulating a list of super investors that are selling NVIDIA stock, and I can't reach it right now. I don't know where I put it, but the one thing I would say is that the number one super investor that you got to keep an eye on that was selling stock of NVIDIA is their own CEO. Their own CEO is offloading a lot of stock. And what was interesting was Jensen Huang, the CEO, was unloading it at high NVIDIA stock prices. So it's like, whoa, that's interesting. I mean, if you need cash, you can unload it at any time. You can just say, hey, I need cash, and price doesn't really mean anything. But he's unloading at high prices, which was interesting. The other person that unloaded it was Josh Brown. The other one was Jay Pulaski. And I just started the list, right? I'm going to go through and collect all the super investors that are selling NVIDIA. We'll be doing an NVIDIA video. I'm shorting NVIDIA. My short position's doing okay. I'm down like 3-4%. And the story is intact. I started shorting at the end of May. The story on NVIDIA is intact. I actually have more information and awareness that makes me feel like, yeah, that was that's an interesting move. It's a trade that I'm comfortable with. I think that NVIDIA is going to drop. It's going to drop to like $80 a share. I think I can make 30% return in less than a year on NVIDIA, and kind of, if anything, prove to myself that, yeah, my analysis and my observation is in some ways accurate. And I'm seeing that the market's beginning to reinforce what I was thinking. So we'll see how that plays out. Let's take a look at Tencent. I cannot stop talking about Chinese stocks. Well, I don't know if I'm looking at the right one here. This is the one that's traded in the Shanghai Stock Exchange or the Hong Kong Stock Exchange. So that's not the one I want to look at. I want to see the one that's traded on the New York Stock Exchange, the one nearest to me. Man, these guys are doing great. And you look at their business, right? This is a very desirable business. Tencent Music Entertainment Group is a company that develops music streaming services for Chinese market. They have an app development arm. They do a lot of apps, a lot of games, and they do music. What's their market cap? So TME. So TME market cap is only 21 billion, right? So you look at this company, you're like, music streaming, games. So this is kind of a combo. I know they're not publicly traded, but the company that Microsoft acquired, forgot their name. But you got other streaming services and so forth. And all those are valued much higher. 21 billion is not that high. If we look at like Spotify is kind of a one-trick pony, right? They do music. 75 billion. Be interesting to see how many subscribers do they have to their music service. China's a big country, and then there's a lot of Asian countries that might be Tencent users. So interesting, very interesting play here. And so I'm going to value Tencent in a video. This is a strong buy, but the price is really appreciated. 31% in the last month. And you can see these valuations are so darn low. That's what's been, to me, what's exciting is these companies were valued in a particular way. And I get that, in 2022, things were sold off. But for Pete's sake, let's just kind of go from here to here. Is the company really worth 86% less than it was before? I'll give you 50 because everything should have gotten a haircut in 2022. But now from that low point, people did really well on Tencent, 273%. You don't have to get up to their previous high to make lots of money. You just have to know when to buy, and then you make lots of money. So that's my game on China is there's a lot of upside. This whole room from where they're at now, which is 13.67 a share, up to 25 is the opportunity. At that rate, they're going to almost double in value. And I think that's very possible. And I bet you the fundamentals support that. So that's what's exciting about Tencent. All right, let's take a look at Oxy. So Oxy's probably doing quite well today in trading because oil prices are up. They're up 0.6%. The 1 year, it's down 14%. This is Warren Buffett's probably well-known oil stock because they're an oil explorer. They're what that industry calls it an upstream market. And he's really bought into Oxy. He bought more shares. Warren Buffett also owns Chevron. And this company here has had kind of a downturn because of oil prices, but recently it's beginning to work. It's got last 2 days have really created a nice bump of 7%. When I don't look at Oxy as an investment, I'd probably make because I have too much Chevron. I own over $100,000 at Chevron. I'm good on oil. But this is an interesting stock, especially as we saw oil prices come down. It's really made some of these companies fairly attractive. And if oil keeps rallying, this is going to be a big winner. But that's tough to determine, right? Is oil really going to rally and continue to rally up? So that's, but what would prevent it, right? Like if we have these conflicts and these conflicts escalate and there's tension between Iran and Israel for a long time and other oil producing countries kind of get involved, it could really cause the oil industry to start cranking up. All right. So just a quick peek. Why is Oxy interesting? I think I want to look at their free cash flow. This is the value, right? No big surprise. Warren Buffett's buying into free cash flowing companies. You can see their cash flows really come down the trailing 12 months because of that oil price. But when oil prices were high in 2022, their free cash flow was 3x. So their stock price was way higher. So it'll be interesting to see. I don't think Warren Buffett's making a ton of money on Oxy at this point. I think he's ridden the stock price down. It looks like Shadow Guy's bringing up Pump. I like Pump. So Pump is, they are a services company that is helps companies predominantly in the US, but they can help in other countries as well. They help in the fracking process, which there's oil reserves in the US that are hard to extract because the oil is somewhat absorbed into the shale and the rocks that it's in. So they have a process to pressurize that area, and then it somewhat squeezes or pushes out the oil, and they extract this oil that isn't that far from the surface of the earth. And some of the oil extraction techniques, they go way down, which is difficult and expensive because they have to drill way down. So fracking is a different way of getting that oil out that they know exists there, but it's somewhat absorbed and caught into the shale and to the rock and the stone that's there. So these guys help in that process. They're up 1%. It's a nice little company. It's less than $1 billion. Wow. And they're down 24%. But as you see oil take off, these guys are going to take off because they'll become in greater demand, right? When you look at the company, it was growing nicely, and the quarterly, they're still dropping in revenue. I think companies are canceling, like, okay, we don't want to extract oil right now. We don't need your services. But as oil prices begin to take off, oil companies are going to be calling Pump and saying, hey, can you come out here and help us? And we'll pay you what you charge. So this is an interesting play on oil. If oil prices keep cranking up, Pump's stock price is going to keep going up. It's going to go in the same direction as oil. All right. So NVIDIA, best spot for the AI revolution. Yeah. So best right now, like for 2024 and 2023, I agree with you. The hyperscalers, as well as companies who can afford having their own GPU superclusters, ordered a lot of product from NVIDIA. That's going to come to an end. And you're not going to have the same demand on GPUs for the next 10 years. It's a cyclical industry. Look up semiconductors. They're cyclical. You have a build out and you have a recession in that particular company or micro part of semiconductor, because once everything's built out, they just use it. Okay, great. We got all the GPUs we need for now. We don't need any more. So I agree that in 2024, NVIDIA is in the right place, right time. But it's not about just 2024. It's about what's our revenue going to be like in 2025? What's going to be in 2026? So when we look at NVIDIA, what has been incredible is their revenue growth, right? But we got to examine it closely. You've had revenue growth, but the compares were very different. You see how you're comparing Q1 to a $7 billion number. And I did this on a video. You can watch it on my channel. Once you forecast and you start comparing to these bigger numbers, the revenue and the sequential revenue is the sequential growth is where you got to measure this company. They're going from 26 to 30. Sequentially, that's not a lot, and it's slowing down. So the stock price is priced as if for the next 10 years, you're going to have the same dramatic 100, 200% growth. That's just not sustainable. It's not the case. They may even see negative growth in the next 24 months. Once those numbers start getting into people's hands and minds, they're going to exit the stock. It's no secret that the stock's not eclipsing previous highs. Super investors are selling NVIDIA. They're selling it because, yes, NVIDIA is the company of the time. But in a year from now, I'll bet anybody $5 that we're going to be seeing a stock price that's significantly lower. I'm putting my money on the table. I've shorted NVIDIA stock. I'm down 4% on that position. It's been up. It's been down. It's been really interesting. And it's been worth the price of admission. It's been, my internal fortitude is a little stronger. My conviction is a little better, a little stronger. And we'll see how it plays out. But I appreciate your comment. I agree and disagree at the same time. So Sergio, good to see you, man. Are we late to the party? I don't think we're late to the party in Chinese stocks. I think the party has certainly taken off. It's kind of like the first hour of the party, you had Taylor Swift open up for the party. And it's like, oh my God, this is great. Party's awesome. Well, I think the party's going to extend for a while because the last 3 years have just been so bad for Chinese stocks. They were sold off so much that they have so much room to go up. That's the reason for it. So James, is now a time to buy Pfizer. I like Pfizer. But healthcare, I think I showed earlier that sector is just not loved. Brandon B, how you doing, man? So let's take a look at Celsius. Okay, let me put that one on hold a little bit. Let me check some in Manjeet Sangar, Rev B, Sojit. All right, let me put those guys. I may put them on. Excuse me. I may put those on the live stream tomorrow. Excuse me. Sorry about that. And the reason for it is that I've got to get going. I was hoping that we can get through this in 1 hour. We're 1 minute from that target. So I appreciate you joining. I will try to add those to the live stream later today. That's going to be at 5:30 or tomorrow. Everybody, let's take a look at the market real quick and then we'll call it a day. All right. So we've got the Dow is down just slightly. All the markets are pretty flat. Very good. Russell came back. Yeah, good to see the Russell's back. Small caps. Come on, small caps. HP's back a little bit. Man, I had a brutal day yesterday. It sold off big time. All right, looks good. Let's take a look at the sectors, see which sectors are moving. So energy's still on top. Technology made a move. It's doing well. Materials is doing well. Financials is holding its own. Industrial is holding its own. Utilities is right there. And then consumer discretionary is still at the bottom. Healthcare is down. Consumer services is down. Google is part of consumer services, so that's a big part of consumer services. All right, so a couple of new comments. Give me a second here. Hey, welcome to the live stream. Let's see what the market's doing today. See if there's any opportunities to get. And let's see, Manjeet. Yep, good comment. Thank you. I appreciate it. So everybody, thanks for joining. Special thanks to everybody who's a paid member. I appreciate that. As you guys can imagine, there's some expense to have a channel, streaming software, all the things, computers, monitors, lights, and all that good stuff. And I appreciate your sponsorship. I think it helps pay for some of those items, and I really appreciate it. And I'll try to make it very worth your while as a paid member. I'll really respond to your comments a little quicker. I've given you access to a folder. I know some of you have joined and didn't provide an email to me. If you could please do that so I could add you to this folder of tools that I use when I analyze companies. And then I'll invite you to a weekly conference call where we can talk about stocks, and it's going to be a member-only conference call. So if you could please do that, I appreciate it, and I'll add you to it. So again, special thanks to all those who sponsor the channel. Everybody, have an awesome day. Good luck with your investments. I'll be back tomorrow at the same time, which will be 9:30 Eastern in the morning. And I'll be back tonight at 5:30 Eastern, as well as tomorrow night, 5:30 Eastern. Everybody take care, and thanks for watching.